Today I'm going to take a glance into the crystal ball. What will the future of international trade look like? Industrialized countries have already largely benefited from the advantages of the global markets regarding the world market openings in the present day. Further market openings, especially agricultural and labor markets, are now more interesting for emerging and developing countries, while industrialized countries are afraid of losing their international competitiveness in areas like capital and technologically intensive products. The reason for this is the technological catching up of the emerging countries, especially Asia. On the basis of these considerations, I can see three fundamental developments for the international trade in the future. The interests of industrialized countries in free international trade agreements will probably be limited as the competition with low-wage economies increases the pressure on labor markets in industrialized nations. Developed countries are therefore more interested in regional free trade agreements with other developed economies, such as, for example, the free trade agreement between the European Union and Japan. Moreover, production processes are becoming increasingly capital and technological intensive worldwide. As a result, shifting production processes to low-wage countries will become less important. The trend of reshoring, so the returning of the production and manufacturing of goods back to the company's original country, is likely to increase and will be fastened by the processing 3D printing technology. Higher energy prices, for example, also due to the introduction of the CO2 taxes, will further promote this development as transport costs will rise as a result. Overall, production will move closer to the sales market. Even if production takes place in the future more closely to the sales markets, enterprises can contribute to sell their products abroad. For this purpose, however, they must set up production facilities abroad, and that means huge investments. This means that capital flows will gain importance, while trade flows will become less important. Even if the interest of the developed industrial countries in expanding international trade declines, it won't lead to a complete economic isolation. The global exchange of goods, services, technologicals and capital will continue to be an essential part of people's prosperity in the future.